From humble beginnings in Omaha to the dizzying heights of global finance, how exactly did Warren Buffett navigate the labyrinth of the investment world to amass a fortune unparalleled by most? As we unravel the tapestry of Buffett's financial journey, we'll uncover not just one, but multiple paths he charted, each illuminated by shrewd decision-making, timeless wisdom, and an uncanny knack for spotting value where others saw none. Step into the world of the Oracle of Omaha and explore the roads he took, the strategies he deployed, and the philosophies he adhered to on his meteoric rise to becoming a billionaire. This is not just a story of wealth, but a masterclass in the art and science of investing. Here are 8 paths Warren Buffett followed to become a billionaire. The first path is early interest in investing. Since he was young, Warren Buffett showed a natural talent for numbers and a genuine love for business. As a kid in Omaha, Nebraska, young Buffett wasn't just your average kid. He had a knack for business and would sell all sorts of things like chewing gum, Coca-Cola, and even deliver newspapers. Wow, it's amazing to hear about his early start in the world of finance. At just 11 years old in 1942, he made his first investment by purchasing 3 shares of Citi Service preferred for $38 each. During his early venture into stock trading, he learned the importance of patience. He sold his shares for a small profit at $40, but then saw the price skyrocket to around $200 per share. Warren's financial mindset was greatly influenced by his father, Howard Buffett. As a stockbroker and later a U.S. citizen, I have gained valuable experience in the financial industry. Congressman Howard introduced his son to the fascinating world of stocks, trades, and the financial market. During his teenage years, Warren's entrepreneurial spirit continued to shine bright. He and a friend decided to invest in a pinball machine and set it up in a local barber shop. Their venture flourished, and before long, more machines started appearing in different locations, giving Buffett valuable lessons in return on investment. Buffett's financial knowledge was mostly self-taught, but he also pursued formal education. He attended the Wharton School of the University of Pennsylvania and later the University of Nebraska. But it was at Columbia Business School where he had the opportunity to meet Benjamin Graham, who is widely regarded as the father of value investing. With Graham's guidance, Buffett was able to further develop his investment philosophy, which played a crucial role in shaping his successful career as one of the most respected investors in the world. Let's move to the second path, the intelligent investor. Warren Buffett's investment philosophy is all about finding great value in stocks. He follows the principles of value investing, which were first explained by Benjamin Graham in The Intelligent Investor. Buffett believes in buying stocks that are priced lower than their true worth or intrinsic value. Intrinsic value, which is a core principle, refers to the true worth of a company, separate from its current market trends. Buffett focuses on stocks that have a noticeable difference between their intrinsic value and the current market price. This strategy, known as the margin of safety by Graham, helps to reduce the potential for losses. This doesn't mean Buffett goes after just any undervalued stock. He really believes in finding high-quality companies with a competitive advantage, steady earnings, and smart management. His investment choices, like acquiring companies such as Coca-Cola and American Express, show a strategy of long-term commitment. He even humorously refers to his favorite holding period as forever. Unlike the impulsive behavior often seen in the stock market, Buffett takes a contrarian approach. He famously advises being cautious when others are overly confident and only being confident when others are fearful. This philosophy, along with careful analysis of company financials, has allowed Buffett to navigate the unpredictable stock market with remarkable skill and success. The third path is an exciting collaboration with Charlie Munger. The partnership between Warren Buffett and Charlie Munger is truly remarkable and has achieved incredible success in the world of finance. The amazing combination of their wisdom, skills, and investment philosophy has truly transformed Berkshire Hathaway into the incredible conglomerate powerhouse it is today. In the 1960s, Buffett and Munger were introduced to each other by a mutual contact. They soon realized that they both had a passion for value investing and shared similar perspectives on business. Buffett had already proven himself as a smart investor, with a knack for finding undervalued stocks. Munger, on the other hand, brought a fresh perspective to the table. He emphasized the value of purchasing high-quality businesses at fair prices, rather than solely focusing on cheap companies. This small change in strategy showed how Buffett's investment approach has evolved in a significant way. They started working together to find and invest in businesses that were either undervalued or had great potential for long-term growth. Instead of just being passive investors, this strategy gave them the opportunity to have more control and influence over the direction and operations of these companies. Over the years, Berkshire Hathaway's portfolio has expanded to include a diverse range of businesses, ranging from insurance and utilities to consumer goods and transportation. One of the great things about their partnership is how much they respect and push each other. Both Munger and Buffett are big fans of value investing, but Munger is especially known for his insightful philosophical thoughts and clever sense of humor. He often serves as a great sounding board for Buffett's ideas. The annual letters to Berkshire shareholders and the Q&A sessions during the Berkshire Hathaway annual meetings are a great way for them to share their thoughts, experiences, and even some funny moments. It's always a treat to read and listen to what they have to say. The fourth is the owning of Berkshire Hathaway. Warren Buffett's journey with Berkshire Hathaway started in the early 1960s, not as a strategic masterpiece, but more out of a slight annoyance. Oh, did you know that originally Berkshire Hathaway started out as a textile manufacturing company? It was based in the lovely town of New Bedford, Massachusetts. When the stock price took a dip, Buffett saw it as a great chance to buy shares because he believed it was undervalued. After a few discussions with the management about buying back shares at a slightly lower price than agreed upon, Buffett felt a bit frustrated. So he made the decision to purchase more shares, and eventually gained control of the company by 1965. Once in control, Buffett discovered that the textile business was facing some challenges and wasn't a very profitable long-term option. However, instead of liquidating the company, he made a crucial decision that would greatly influence the trajectory of his investment career. With Berkshire Hathaway as a starting point, he happily steered its funds towards purchasing other businesses and stocks. Over time, the textile operations were completely phased out, and Berkshire Hathaway happily transformed into a holding company. The brilliance of this move was how Buffett skillfully redirected cash flows from the textile operations and other early acquisitions into more profitable ventures. Over the years, Berkshire Hathaway's portfolio has grown a lot. It ended up including a wide range of businesses in different sectors, from insurance companies like GEICO and General Re to consumer brands like See's Candies and Dairy Queen, and from industrial giants like Precision Cast Parts to utility companies and even a railroad in the form of BNSF, the conglomerate became a friendly representation of the diverse American economy. Buffett has always taken a hands-off approach with Berkshire Hathaway, allowing the subsidiary companies to handle their daily operations. He has a lot of trust in the management teams of the businesses he buys, giving them independence while also giving them the support and stability of the larger Berkshire company. The fifth path. Let's talk about the power of compounding. Warren Buffett's wealth is not only due to his smart investment choices, but also the incredible power of compounding. Compounding is such an amazing concept. It's like the eighth wonder of the world. Basically, it means that when you invest your money, it not only earns interest or returns, but those earnings also start earning more money for you in the future. It's like a snowball effect that can really boost your investment over time. Buffett has always had a friendly approach to investing, focusing on the long term. Unlike many investors who chase short-term profits by constantly buying and selling stocks based on market trends, Buffett's strategy is quite different. He prefers to invest in companies that have strong fundamentals and then hold on to those investments for long periods of time, sometimes even for decades. This approach is a great fit with the principle of compounding. For example, let's say Buffett finds a company that consistently earns a 10% annual return. When he holds on to that investment for multiple years, the returns don't simply add up in a straight line. Instead, they multiply like magic as the company grows. Your initial investment will grow by 10% in the first year, and in the second year, it will continue to grow on the new, larger amount, resulting in even more substantial returns. As time goes by, the growth of this process becomes more and more exciting. Have you thought about investing in Coca-Cola? Buffett started purchasing shares in the company back in 1988, and instead of selling them, he has let his investment grow in value over the years. Wow, it's amazing to see how Coca-Cola's profits and dividends have increased over time. This has led to significant growth in the compounded returns on Berkshire Hathaway's initial investment. Another great aspect of Buffett's compounding strategy is his preference for not paying dividends for Berkshire Hathaway shares. Instead of giving profits back to shareholders, those profits are reinvested into the company or used to acquire new businesses, which helps the company grow even more. Understanding the power of compounding is really important. It's not just about how much time you have, but also the rate of return. Buffett has an amazing talent for consistently choosing investments that not only give a return year after year, but also tend to outperform the overall market. The next is acquisitions and investments. Warren Buffett's time at Berkshire Hathaway has been filled with a combination of acquiring companies and making significant investments in different businesses. This blend has helped Berkshire diversify its holdings, manage risks, and enjoy the profits from its subsidiaries, as well as the growth and dividends from its equity investments. Outright acquisitions. Berkshire Hathaway's portfolio is filled with a wide range of businesses that they fully own, covering different industries. These acquisitions are usually known for their stable cash flows, strong competitive positions, and capable management teams. Hey there! Just wanted to let you know that we've made a few acquisitions recently. GEICO is an insurance company that was acquired by Berkshire in stages, and they became the full owner in 1996. BNSF Railway. This awesome U.S. railroad was acquired in 2009, bringing some amazing infrastructure assets to Berkshire's portfolio. Precision Cast Parts. In 2016, Berkshire acquired this awesome manufacturer of aerospace and industrial components, which helped to diversify their holdings even more. These awesome subsidiaries are fully owned by Berkshire, and they make a direct contribution to the company's overall profits. This means that the profits they generate can be used for other cool investments or acquisitions. Equity investments. In addition to outright acquisitions, Berkshire Hathaway also has a significant stock portfolio. They hold equity stakes in many well-known companies around the world. I wanted to share with you some really cool investments that have caught my attention. Here are a few of the most notable ones. Coca-Cola, a super cool beverage company. Buffett got interested in Coca-Cola way back in 1988 because he loved its awesome brand and how it's enjoyed all around the world. Over the years, the value of this stake has grown tremendously, and the dividends from this investment alone have become quite significant. Apple. Despite his previous caution towards tech stocks, Buffett made a noteworthy investment in Apple beginning in 2016. Thanks to the company's strong brand loyalty, ecosystem strength, and impressive cash reserves, this investment quickly became one of Berkshire's biggest equity holdings. American Express. Buffett has been investing in this amazing financial services giant since the 1960s and has continued to hold on to his stake. He really values the company's strong brand and the loyalty of its customers. Let's talk about continuous learning, shall we? Warren Buffett's insatiable curiosity and commitment to continuous learning have played a key role in shaping his success as an investor. Despite his incredible achievements, he has a strong passion for reading and enjoys devouring multiple newspapers every day. He also loves diving into financial reports, books, and journals. This strong desire for knowledge isn't just a hobby, but a crucial foundation of his investment strategy. Buffett stays up to date on global economic trends, understands complex business models, and keeps track of geopolitical shifts to make sure his investment decisions are always on point and long-lasting. He loves reading and thinks it's really important. He even sets aside a good chunk of his day for it. By doing so, he not only expands his knowledge of different investment opportunities, but also improves his skill in predicting market fluctuations. His commitment to continuous learning has helped him stay adaptable in the ever-changing financial landscape. By staying rooted in core principles, his strategies have remained relevant over the decades. For Buffett, knowledge is not only powerful but also the foundation for making well-informed decisions in the intricate world of investing. Finally, let's talk about integrity and reputation, shall we? Integrity and reputation mean a lot to Warren Buffett. They are not just empty words. They are at the core of his investment philosophy and personal values. He frequently emphasizes their importance, mentioning that it takes a long time to establish a good reputation, but only a few moments to destroy it. Buffett really values these principles for two main reasons. First of all, he understands how crucial trust is in the business world. He's famous for his direct and sincere way of doing business, often sealing billion-dollar deals with just a friendly handshake. Also, it's worth mentioning that he gives a lot of importance to the character of a company's management team when assessing potential investments. To Buffett, a strong balance sheet or impressive earnings report is just one piece of the puzzle. He looks for businesses led by leaders who show strong ethical standards and a dedication to fairness and transparency. He thinks that companies with integrity are in a better position to handle challenges, build loyal customer bases, and achieve long-term success. Buffett's focus on these principles is not only moral, but also strategic, which is pretty awesome. He recognizes that in a world where everything is connected and there is a lot of information available, having a bad reputation can actually lead to real financial problems. He is careful when it comes to associating Berkshire Hathaway with any entities that could potentially harm its reputation. One of his most famous sayings goes, "We can handle losing money, even a lot of it, but we can't afford to lose our reputation, not even a tiny bit." This quote really captures the essence of his belief. For Buffett, integrity and reputation are not only important for doing what's right, but they also play a crucial role in achieving long-term success in the business and investing world.